So those are Silicon Valley Bank customers basically running to the bank to get their money out before everyone else does the same. And that's essentially a bank run. Now the bank has been shut down. There's all sorts of crazy stuff going on. And let's just jump into headlines and get the details. Silicon Valley Bank collapses following run on deposits. And this is the second biggest failure in U.S. history. There are other banks that may or may not be experiencing trouble. That's sort of why you're seeing all of the bank stocks take a dive at the same time, because people are worried. So it could be Signature, First Republic, who knows? Those stocks are also feeling the pain. You can take a look at more headlines. Silicon Valley Bank shut down. Biggest bank failure since the financial crisis, and that's the 08-09 thing. And one of the things that's really important is the banking industry is built on trust. Like, I give you my money, I trust you're going to keep it safe, and I trust when I need it, you're going to give it to me back. And essentially, if that trust runs out, right, people just run the bank. It's like, give me my cash, I'm going to just put it under my mattress. And for people who lived through the Great Depression, if you know anyone from that generation, it was known that they didn't trust the banks because they saw this sort of game before, and it's really, really scary. Some of the issues also is that we're talking about quite a bit of money. So evidently, as of December 31st, 2022, they had $209 billion in assets. Who knows what it is now, but that's what it was in December. This is more headlines. Silicon Valley Bank closed by regulators. FDIC takes control. And my understanding is that they insure accounts up to $250,000. However, not that many accounts fall below that, meaning that the vast majority of their accounts are above that, meaning uninsured. It's really quite crazy. The stock is frozen, so there is no chart, no trading on this thing. If you tried to, I guess, get their online banking system, you got system unavailable. That's pretty alarming, I'm sure. There are people lining up, right? Biggest failure since 2008, that's Silicon Valley Bank, and it's just not good. You can take a look at this here as well. Silicon Valley Bank shut down by U.S. banking regulators. And this is the second failure and biggest failure in history. So you can see here, there's WAMU. I lost money in that thing. I remember this thing. I was not happy. A lot of people are unhappy. Then you have SVB, Continental, IndyMac, and American Savings. So if you guys have been involved in these other three or even WAMU, let me know. It's interesting, but you can get the sense of the scale of this kind of thing of a failure. I mean, second largest in U.S. history, and it happens so quickly. This is sort of why it's so alarming. Silicon Valley Bank is the biggest U.S. bank failure since Washington Mutual during the 2008 financial crisis. And this will give you a general sense of sort of where we are in comparison to history. So we are here. This is the total assets of failed U.S. banks by year. And so basically, we're kind of like half of the peak over there. So will there be more banks to fail? And will we reach those prior levels? So as of now, people are kind of panicking, and I understand that. I can't predict the future on that. I mean, I just can't. What I will say, though, is that I think this represents sort of the fervor, because before we've seen crypto, sort of banks experience problems with, say, Silvergate. You're talking about the exchanges like FTX, maybe Binance. And now we're having essentially sort of like this big tech bubble kind of bursting with the big tech bank. It's basically what it is, experiencing problems. So Silicon Valley Bank fails after run by venture capital customers. And it's interesting because many of their customers, so this is not really like a consumer bank. This is basically for businesses who basically hold large sums of money there. And basically, too, is that a lot of these companies are burning cash, and so they need, cash to pay the bills, and go to the bank, and the bank doesn't have any. That is a problem. And then normally what they would do, like say the bank, will give them their money, they would just raise money from, venture capital investors, but that money is dried up as well. And we also know the Wall Street money is dried up. I mean, it's just, the money's not there. This has been a slowdown, and we're certainly seeing it. Now, this is what I was telling you guys before with the amount of deposits that are insured/uninsured. So this is deposits of less than $250,000, right? This matters because the government, the FDIC, will insure your account up to $250,000, right? Basically, you're okay if you have under that amount of money. However, it's here it was 2.7% of accounts are under $250,000. So that means like what, 97-ish percent, 97.3%-ish around accounts essentially have balances over $250,000, meaning the amount is not insured. My understanding, and I've seen different number of this, it's anywhere from like 150 billion to 160 billion of uninsured deposits. So it's pretty crazy. And what they're saying is they're going to give you like basically a note. I think they're calling it a receiver thing. and you'll be first in line to get your money back. But me personally, if I have my money saying I would want my money now, which I totally understand, right? What's going on with Silicon Valley Bank? So this was the 151 billion. They're saying it is over the FDIC limit, but again, I've seen different numbers on this, so it's hard to say exactly how much it is. The other thing that's interesting as well is basically it's called SVB. They overcommitted themselves and they bought a bunch of bonds. The bonds went down in value, and then what they had to do if people want their money back, they'd have to sell their bonds at a loss. Now, basically, right now there are other banks who are exposed to essentially bonds going down. This is saying this is all FDIC banks, right? Right now, there's 620 billion worth of unrealized losses, and that's in the fourth quarter. So, if theoretically there were a run on all banks, and was like at the same time wanting to go get their money out, you could have a really, really serious problem. This is sort of where the government and all of the banks can try to keep everybody calm, right? I can't predict what people are saying. That's what people are going to do. That's sort of why I was saying we got to watch for today, because this is all about sentiment, right? Do you trust the institution that you're at, and do you trust that they have your money? One of the things that also is happening is there are some people who did predict this. You can see here, short sellers were out front of the Bank of Hewell, and you're going to get this as well. So yes, there were some people betting on this, and we'll probably come out in the next couple of days like who made tons of money on this thing. But there are actually some people who were betting that the SIVB or Silicon Valley Bank was actually a good investment. In fact, I was looking at this. These are Wall Street sort of ratings on this thing. There was only one sell rating. That was Morgan Stanley had a sell rating. That was 2 days ago. You had a bunch of buy ratings on this thing. Again, this is Wall Street was trying to sell you this thing. So JP Morgan, Jefferies, Wells Fargo, Goldman Sachs, they were all trying to sell you this thing. And then some of the other ones had holds on it. This was just the last couple of days. You also had Jim Cramer a month ago, back in February 9th, saying, hey, everyone, you should buy Silicon Valley Bank.
Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap.
The other thing which I talked with you guys about trust, you can see this here as well. Silicon Valley Bank collapse leaves VC community scouting for options, and some VCs see supporting Silicon Valley Bank as an act of loyalty. And again, this is all about trust. Because think of it this way, guys. If you're like starting a company and you're like, you know what, I need to get a loan, you go to the bank and you want the bank to believe that your company's going to work and to trust you that you're good for the money, et cetera. And then you have a relationship with them, right? So maybe you feel like kind of loyalty because they help you get started. Or for example, maybe you deposit a whole bunch of cash with them and you've always had, no trouble getting the money in and out, wiring the money to different people, and just basically doing all of your banking needs. And so like you kind of feel loyal. However, in this kind of world, and this is sort of why I always tell you guys, see the movie Margin Call. People have been saying in the comments that it's now free on YouTube for the next, week or so. Just watch it when you get a chance. You will see sometimes people lie to their friends for money. And also too, in this world, when it comes to like your money, right, and you're worried that your friend may or not be having or keeping your money safe, sometimes you just got to look out for yourself. Now, I'm not saying you lie to your friends for money, but I'm saying do look out for yourself. That's what I was saying, just the past 24 hours, if you got money in this thing, you got to be taking it out. The same way if you have your money on like dog coins and this kind of stuff. And I've been warning you guys about FTX, all last year, these kind of things. It's just, you have to manage risk. And if it looks like there's just not any benefit for keeping your money in, riskier things, that's when you just run to the bank and pull your money out. So this looks very, very scary, and we'll see how widespread this is. The market has already been taking a hit today. I've been seeing that, and it's been financial stocks, not just in the USA, but all around the world, because we're worried about, oh my God, there are a lot of banks, overexposed. Did they, buy a bunch of assets to get their, essentially get their cash stuck in things that are going down, and they're kind of stuck, right? Unless they sell for a loss. And if everyone comes out and says, hey, I want my money back, we'll see what if that's going to happen. So anyway, thanks again for watching, everyone. Love to hear your thoughts on this, and I'll catch you in the next video.